financial planner can help us in a different manner. First one is they will assess your current financial health. What is our asset, what is our liability, what is our salary, what is our disposable income, and accordingly what is our goal. And they will decide a financial plan if we are on track to meet a financial goal, if we are way short of our target, if we are way ahead of our target. They will assess our current financial health, financial goal, and understand and take it forward. They will set a realistic financial and personal goal. You may be earning 10,000 rupees every month and you have a expectation of getting a return of 1 crore rupees after 2 years, which is a very unrealistic financial goal that you have, which is what a financial planner is going to tell you. So that you should have a realistic financial expectation from a financial planner, and they will help you understand what is a realistic and what is unrealistic based on your current financial health as you may have. Next is they will put plan into action and monitor the progress to meet changing goals. So you may have plan to buy a car 5 years down the line. They will monitor, they will ensure that certain amount of money that what kind of money that you need to save on a monthly basis, and see that your investment is progressing and getting the return that you should be getting to meet the changing goal. A goal may change. A goal may change from buying a sedan to buying a SUV. So they will ensure that saving also needs to go up, and they will ensure that this progress is happening in a fair and a right manner. And you may have different kind of goals, so they will help you ensure that this progress is monitored on a realistic and a fair manner. There will be a single point of contact for all personalized services. You don't need to go to different people for different product. You may have a requirement of financial goal and they will tell you which product suits you. You may have a product requirement of buying gold. You may have a requirement of buying silver. You may have a requirement of buying shares. So you don't need to go different places. You just need to go there and understand how to go about the process of buying this financial product. They will take care of all your personal needs and requirement when it comes to finance. At the end of the day, the most important thing is they have the required resource and knowledge. They may have all possible tools at their disposal, as well as the knowledge that is required from financial planner perspective, to ensure that they have all possible necessary resource, so that you invest in all possible financial product in a fair and assessed manner. Last but not the least, obviously, when you share your financial data, you'd want some kind of confidentiality, and every possible confidentiality maintained. You don't want your financial data to be shared with anyone without your permission. So, which is what financial planner does. He ensures that every possible confidentiality is maintained when it comes to your financial health needs and requirement. Next, coming on to the basic understanding of what are the different types of investment product available. Now, when I say different types of investment product available, what I have done is I've covered all possible investment product that are largely catering to investment community in general. So we'll see this one by one, and as I've mentioned in my objective, we will focus primarily on stock market and mutual fund investment as we move forward in-depth manner. Yep. So let us understand what are different investment products that we are having in the market at this point in time. First one is gold. Gold has been as an investment product for centuries at a stretch. In early centuries, gold was the only product of investment where buying of gold and keeping this in your disposal was considered secret. And gold has been an investment product for centuries at a stretch. The next investment product is silver. Silver also has been as long as gold is there, for centuries when kings and queens were dealing with gold and silver. Next is equity shares. Equity shares is a phenomena has been in the market. In Indian market, we have Bombay Stock Exchange, we have National Stock Exchange, where equity shares of different companies are traded, and they are traded every single day. And this as a product is a high risk, high reward product, and depending on your investment risk profile, you need to invest in equity shares, and we'll see how this product can help us. Next, mutual fund. Mutual fund is basically another investment product that is taking care of all possible investment horizon. It's basically a one-stop investment for small investors like us who would want to invest in different product. But mutual fund exposure help us in taking exposure to these products. Real estate. Real estate is another investment product. However, this is one of those products which caters to investors who are having a large amount at their disposal to invest in. You may want to buy a house. Depending on the place that you're buying a house, your real estate requirement can be met depending on where you want to buy a house. Next is bond. Bond is as an investment generally catered by some kind of government initiative. Government may have a RBI initiated bond. You may have government securities. These bonds offer some kind of fixed return at the end of the year, at the end of tenure, which caters to some specific kind of risk profile. Generally, if it's a government-backed security, it will be low risk and low reward kind of a product. But then, yes, returns would be guaranteed. Post office deposit, as we know, we can go to any post office and deposit certain amount of money, and they would cater to our needs and requirement based on our deposit. Next is provident fund. All of us working in a service sector have an employee provident fund. These fund are deducted every month from our salary. For all those who are not in salary sector, they have a public provident fund wherein their certain amount of money can be invested as a part of provident fund. Now the best thing is that it's a long-term investment, and all the entire amount that you get at the end of the tenure is tax-free. It's another important product which gives you certain guarantee and fairly safe amount of investment. National Pension Scheme is something which is initiated by Government of India in recent years, which helps us save and get a pension after a certain number of years. So this is another investment product which is a low risk product, and Government of India has initiated so that after a certain number of years we get some amount of money, a regular income in terms of pension. Bank FD is a very another important product which most of us are aware of. This bank FD meaning we have a certain amount of money in bank, and we get certain return after a certain number of years. Different bank have different interest rate on their FD, and depending on your risk profile, you can go ahead with bank investment if your risk profile is fairly conservative, because return a certain after a certain number of years with a very low risk. If you're investing in a state bank, any bank which is government owned or large private sector bank, your return are fairly liquid, and you can get your money back after a certain number of years based on the rate of interest that is offered by the bank. Next is company FD. Just like bank FD, companies of different sector, different time horizon, they come up with certain FD requirement in based on their business cycle. So you would see bank FD by large company, by small company, and by medium-sized company as well. A large company, obviously, depending on the risk, a large company may offer you a very low amount of risk, but return offered by those company would be less as compared to a very small unknown company where return offered by them would be very large, fairly very high return. They may offer you a return which is as high as 15% per annum, but the risk involved in investing in those companies is extremely high, because then the returns are obviously something that is not guaranteed and at risk at any point of time. So depending on the risk profile, you may want to invest in company FD as well. Next is National Savings Scheme. This is another post office initiated scheme wherein returns are guaranteed, and you get tax benefit as well. And these NSC certificates are available in any post office that you go to. Next is debentures. Debentures is again company initiative. This is more or less like a fixed investment product, wherein company debentures, company offers certain amount of interest on this debenture issued by them, and at the end of the year, its interest rate which is more or less guaranteed. However, returns are low depending on the risk profile of the company. Return would depend. ULIP plan is a investment product which is offered by insurance company. This is more of a combination of risk and investment. So, for example, if you invest 1 lakh rupee, you will get a certain amount as a risk cover for your life, as well as this amount of 1 lakh would be split into investment. So it's a combination of investment as well as risk, which is covering your life. However, on a short-term basis, because the charges involved is very high, your value of your investment would be very low. However, on a long-term basis, to a very long-term basis, investment return would be high to a very high. Derivative investment is another financial product which caters to very high aggressive type of investor where returns are extremely high, but risk is also very, very high. If you don't understand derivative investment, anybody would suggest that you need to stay away from this kind of investment as far as possible. Obviously, this derivative investment is very close to speculation, but at the same time, if you understand this particular product, you would gain a lot. However, this depends on the performance of the market as well, stock market I'm talking about.